Welcome to the Wealth Multiplier Podcast. We've got a great episode for you today with Gagan Sivia from Azure Properties. She's also a professor at BCIT here in Vancouver. And we're going to talk about a lot of things today, including what she's seeing her students and how they're looking at the world and how they're looking at opportunities coming out of it. We're going to talk about the new federal budget and the new tax changes and how that affects housing, as the government tells us that they want to build more housing and that they want to get the price of housing down so more people can afford it. Is what they're doing actually accomplishing that goal, or is it accomplishing the exact opposite of what they say they want to do? We're also going to talk about how she's in the development world and how developers are the big bad wolf and it's always they're the enemy. But really, how do you need developers to build those houses for people to live in if you want to have a thriving community and if you want your community to be able to move into the future, especially as we look at densification? We're also going to talk about the disconnect between the financial literacy that lacks in our education system and how governments and media are able to tell you one thing while the exact opposite is the actual truth. And we'll just talk about the fees and the costs and the taxes that surround housing and why does housing cost so much. And, I learned today that over 30% of the cost of a new dwelling unit is directly related to fees, usually municipal fees that go into building that unit. We'll talk about interest rates and what does high interest rates affect? What would it take for those interest rates to come down? We'll talk about what some people are doing to absolutely kill it. How are they getting ahead and what are they doing to make some money today? Really a big episode with a really cool guest. Let's get straight into it.
Sure, for sure. Thanks so much for having me here. So a lot of the way I essentially got to where I am today is by taking chances and risks and really not knowing what I wanted to do, but knowing I wanted to proceed.
Okay.
So I started with sciences at UBC, didn't like that, wasn't a fit. Then I pursued financial management at BCIT and then took accounting, not because I wanted to be an accountant. The goal was never to be an accountant. Right. And then from there, just fell into so many different opportunities because I just knew I needed to do the next thing. And whatever the next thing was, I figured it out once I got there.
All right, cool. So that's very entrepreneurial, and that's what all of the TikToks say to do, right? Just jump in and figure it out, and then go as you do it. Can you share just a little bit about what do you do at BCIT? So you teach the financial planning course.
I'm a full-time faculty in financial management. So I get to touch on a variety of the departments. So I do teach in accounting, finance, and financial planning. BCIT also has an insurance program as well, but that's outside of my scope.
And then at Azure Properties, you're a developer and...
Yeah, so developer, and I really focus on the finance and analytics side of things as well. So then I'm also very, very active amongst the development community. So I am very active with UDI, Urban Development Institute. I'm also involved with ULI, Urban Land Institute, and CREW. And there's a couple other smaller groups that have kind of popped up as well. And with UDI, I'm a chair of one of the liaison committees within a particular city. And I also help with their education seminars and education committees as well.
Right. And Azure has how many projects on the go right now?
We're a little under 20.
Right.
Yeah. And we're in about 12 different cities at the moment, but in various stages of development and construction.
Right. Okay. So you have more than 24 hours in a day that everybody else has.
It depends on how you count it, but yes, I do work a lot.
Right. Okay. We'll wanted to take the journey today really to talk about kind of, these are so many different things. We'll start with the youth, right? So at BCIT, you have a lot of students coming through that program every year or every semester.
Yeah.
What are they seeing? Like, what do you get their feeling from? Because if you listen to the media, everything's a disaster and the youth hate life and see no opportunities and don't want to do anything. They just want to scroll. Is what the media is saying and what you see in real life, is that the same thing, or is there something a little different there?
Oh, it's totally different. It's always on the individual. And as you know, you can listen to whatever side of the media coin you want to. But the reality is when you're actually connecting on the grassroots level, who are you actually chatting with? How are you forming your opinions? For me, with my students, I really try to engage them and bring in the real world examples. So not to sound cliche, but, I'll talk about my journey, the fact that I'm still in industry. I haven't left industry. And I do a lot of different things and activities, and I bring them on, whether it's, behind the scenes, showing them the presentations that I'm about to present to, or, if I'm speaking at a conference, I will practice with them and rehearse with them. So then they kind of become like the test for that journey. And when they see it live, it brings them in because they were a part of that first draft, essentially. And then I try to get them jobs at the end of the day. So being very well connected in the Lower Mainland is helpful because I'll help my friends who are entrepreneurial as well bring in some of my students as their first employees, or, maybe their first jobs for that student. So that actually has full circled many, many times over. And so that's why I don't really see that doom and gloom. I see a lot of prosperity, a lot of bright futures, but I make sure that my students know that it's not easy. And I reflect that in my courses as well. So then that way they actually are prepared to work.
Okay, cool. So not what we read online and not what the TV tells us.
Not always, no.
Okay. And then as far as on the development side with Azure, you said you've got just under 20 projects at various stages of development. So for those of us that don't all the way know, what does that mean? What are some of the stages of development? Like, say we've got a piece of raw land here that needs to get turned into some sort of apartment building or townhouse complex. What are the stages that goes through to get there? How long does it take? How much does it cost? Who's involved? What are some of the barriers that go along? I know this is a lot.
Oh, yeah, no, for sure. I think it's very similar to like the stages of grief. So if you just kind of parallel them, there's like the denial side of things, there's the unhappiness, there's the tears, there's the fears. But then eventually there is that I can move forward.
You break through.
Yeah, I think it's the exact same.
So on average, if we had a piece of land here and if all the stars lined up, how long until somebody could move in?
Between 5 and 7 years.
Wow.
Yeah.
Okay.
From raw so essentially if you kind of break it out into phases, so the raw land side, essentially raw meaning that it's just not touched. It is what it is. So if it's a house, if it's, just literally bare land, whatever the current status is, to taking that parcel, working with the city, working with your consultants, and figuring out what can be done. How do you add that density with the appropriate density? So then that way it'll get passed and approved by the city and it won't get shot down because you're trying to do something a little bit too aggressive. So we really focus on kind of flying under the radar, doing what's right for the community. But that also means that I have to understand that community and the community need.
Right.
So if I don't get that right, then, you are adding more risk to something that already is deemed to be risky.
Okay. And then, so if everything goes perfect, it can take 7 years to get from dirt to apartment building, somebody moving in.
Yeah.
Things don't always go perfect. What's on an average of how long that takes?
I think that's about it, 5 to 7.
5 to 7.
It just depends on the city and then the nature of the complexities.
So then as Canada's bringing in hundreds of thousands and millions of new people that need places, and we're already short right now, so it's going to be a minimum of 5 years before we can even start to have some capacity to absorb that.
No, it'll take longer simply because we're already short.
Right.
So and the cities and the government are working towards speeding up the process. So there has been some conversations and some changes city by city and province by province, but overall we are significantly short. So there's just a massive delay already, and then to add in that more is not a bad thing. It's just the processing has to be dramatically improved.
Right.
Yeah.
And do you see that being dramatically improved?
I like to pretend that I'm an optimist, and so I do like to believe that is on its path.
Yeah.
So I think that's the political answer.
Okay. And then, and we've heard a lot about trying to like reduce the cost of housing and trying to make it cheaper to get in, with, you know, having to hold, say you've got this piece of land that is going to get turned into a building and it's going to take 7 years to do. So you got to pay for it for that whole 7 years. You got to hold it, pay interest on that mortgage.
Yeah.
And pay to bring the land up to a certain level, pay for the permits, pay for the licensing, pay for just getting it to a point where you can actually even start building.
Yeah.
In your experience, kind of what does a cost like that look like? So say we had an apartment building that's going to be 100 units. How much of one of those units is just like doesn't go to the actual construction and goes to just trying to get it started?
Over 30%.
Ouch.
Yeah, and it's increasing. So just after this new capital budget proposed budget that's going in conversation, a variety of cities actually increased their fees along the way on top of increases that happened the year prior and the year prior. So right now there's, in some areas, there's about a 233% increase in fees alone. And the processing time has not dramatically changed to offset that cost. Interest rates obviously have gone up. Lending overall, even on our side, on the commercial side, has gone significantly up. And, you know, the requirements have changed. So it's more demanding for all, not even just the end user, but also for us as well. So there's a lot of forces that are working against affordability. The new changes that are being proposed, the government intervention, whatever have you, none of that is working towards affordability. Doesn't matter how you do the math, it's not working.
Right. So 30%. So if a place costs $1 million, 300,000 of that.
It's actually more, but yeah, give or take.
Ouch.
Yeah.
So 300,000 of that plus a little bit goes straight to just various levels. And I guess that's to all three levels, like the civic, the provincial, and the federal.
Indirectly, but mainly the municipality, because those fees are charged by the municipality and then collected to the municipality.
Okay.
Yeah.
And then they must have some sort of reason that they're collecting these fees. What are the reasons that they say that they're collecting it? Like, is that just building more roads and schools, or is that
a portion of that? Definitely. And so it's a variety of things. They are limited to where those fees can go, but it does create that unattainability for the end user and those that actually want to participate in that community. Definitely, I agree that, you know, living in Canada, we have amazing amenities compared to other countries. A lot of that is actually funded by development, and the average person doesn't realize that. But the more you squeeze the development side, you know, and I get it, the goal is to help the city get whatever capital infrastructure they want, but at the same time, it can't all come from one source. So there has to be that variety and that diversity of bringing that income in. And also, what's the city doing to improve their economic, you know, opportunities? If they're just simply squeezing development, well, eventually development will stop too.
Right. Yeah, because you could just go build next
somewhere else. Yeah. In theory.
And then, so you mentioned we've got this proposed change in the way that capital gains is going to be taxed in Canada federally. So it hasn't been implemented yet, but it's looking like it's probably going to pass. How does this affect you as a developer? Like, does this help you to make more houses? And does this help people? Is it more easy for people to buy places? Like how does this affect?
Yeah, no, great question. As it's stated, 0.13% of Canadians will be affected.
Right.
That is absolutely incorrect. And that's not just those in real estate. That is those that are in the investment community and wanting to invest in Canada. So bringing in the external funds, all of that is going to be impacted if this goes through. It is very likely, like you suggested, that it will probably go through. It is just another hurdle. It is, again, going to avoid affordability. It's going to go against that. As a developer, though, to be forthright, I'm not immediately impacted because my land is active. Right. So, yeah, by it being active, the virtue is that I'm working in a business. We're progressing. We're actually working through the development process. So it's not just a passive land hold that I'm going to do something in 20 years, right? Or I'll see what the market does and I'm just going to flip it. So we're actually changing the use of the land. We're actually doing something to the parcel. And therefore, we're actually not considered to be eligible for capital gains anyways. which is fine, which is exactly what we want.
Okay. And then I guess we started by kind of giving your background. So you've got the CPA hat, the CFP hat, the developer hat. What would your CPA or CGA hat say also about this new capital gains? Or I know that you'd ask the robot if it was a good idea. What?
Yeah. So when it first got introduced, just to showcase, like, I guess the if you backtrack a little bit, when policy is being made, you really have to think about why are we proposing this, right? So if I'm going to implement a rule in my company or any company, you should really ask, okay, what is the intended goal? What is the impact that this is going to cause and create? If it's minor, is it even worth it? If it's major, are the consequences worth any potential benefit? And so with this proposed change, it's very dramatic. It actually has a significant effect, but often because it is a complicated conversation and there are underlying things when it comes to capital gains calculations, as well as on there's like a refund portion. And, so if you do bad math, then you can come up with a bad answer. And so what essentially I did is I just took what would happen if, and then the words that were proposed, threw it into ChatGPT, the free version, not even the paid version. And it really spat out that this is a terrible idea. So if the bot can figure this out in 10 seconds, you'd think that the person that was putting this policy forward would have at least thought this through too.
Right. And then, I guess it just, adding taxes just makes everything more expensive.
Yeah.
Generally.
Yeah. Oh, for sure. Right. Government intervention and additional taxes has not helped.
Yeah. Right.
Especially not this industry.
Yeah. And with capital leaving Canada, going to other places where they can make more money and get taxed less, they can easily cross borders. So not a good way to bring money into the country.
Yeah. I'm all for taxes. I'm all for contributing to our community. I'm all for the benefits that we benefit from and enjoy living in Canada. But this is just another thing that's happened that actually destroys the spirit of entrepreneurship. So I think it's just beyond just another calculation. It's beyond, okay, this is another increase. It's too much. And when we actually have a dire need to bring in capital, investment, prosperity into this country, this is the exact opposite of what is happening, what we need, right? This is not a solution. This is adding to grief, right?
Right. Yeah, actually. And with your journey of getting here, taking risks and taking a lot of risks to get here, definitely fully understand the entrepreneurial journey. Most of our clientele is entrepreneurial business owners, incorporated, and you need more of those people to come here, risk their money, try new things, build things, and they need to be rewarded for it because you could lose it all. So if you don't lose it all, you should hopefully make some.
Yep. Well, I also volunteer heavily with JABC, so I teach financial literacy to at-risk youth and especially at-risk women, because we don't really teach financial literacy in elementary school and high school.
Right.
You'd have to choose a path in this. And I survey my students and I ask them, why are you here? Why did you choose an education in financial management? And 9 times out of 10, there's a personal attachment to business or a personal attachment to some sort of situation where they needed money and they didn't know how to navigate either themselves or their family. So again, when we're getting financial decisions being made that are actually going to impact our entire country and our economy, when we have an education system that doesn't even teach it, there's a huge disconnect. And when industry isn't involved, when you have these experts of, people that are on the ground, entrepreneurial, working really hard, not to say anyone else isn't, but risking their capital, their money, their investments, mortgaging their home to have this business, and then we're just slamming them again and again and again, eventually people are going to give up, right? Yeah. And then that's not exactly the economy we want to be in, right?
Oh, where just everyone works for the government.
In some countries that they've tried.
Yeah. Yeah.
I don't recall it working.
No.
Yeah.
Okay. Yeah, actually, so you were talking about, that was really interesting, the JABC, the Junior Achievement to BC. I've spoken at their things as well on financial literacy a couple times. I haven't had the opportunity to ask the students because usually we just come in, do our thing, and then it's like, okay, bye. But you were saying that they have some sort of attachment or some sort of story that got them there. is there an example, like, obviously don't share anybody's names or anything, but is there an example that shines that where you're like, wow, that you share?
Yeah, many times over. And so this is my BCIT students as well, that like, why are you here? Because some, other programs are shinier and more exciting. And a lot of the times they're like, well, our family had a business in whatever country or even here. And, we saw, the pride that our family had, in helping all these other members of our community, right? So whether that is that they were really entrepreneurial, they had this idea, they have a market, they have a store, they just like the flexibility. They like being a boss. They don't like being under the gun of some other job. They like the engagement. When you're entrepreneurial, you're definitely far more engaged because every dollar, every minute matters. There's a story that I heard recently about, there's a company out there that the father was basically a 9-to-5 employee elsewhere, and the management just never listened to them. Didn't care, didn't listen. So employee morale was low, didn't care. There's no motivation to do your job except your paycheck. And then so the child saw that and was like, you know what, I'm going to do something different. I don't want that for myself. And so, but how do I get there? I need to understand how to do these things. And then so business came into mind for when it comes to their education, right?
Okay. Switching gears a little bit, staying on the topics of money and growth and things. Right now, interest rates is a big concern. It's a big deal. They've changed significantly over the last couple of years. But when you just say interest rates, it's just kind of this nebulous concept that not everybody really understands. What is it and what does it mean, and like how does it affect things? So with your CFP hat and your CGA hat and your on the ground property development hat, what kind of impact does rising or lowering interest rates have on just general people, on our ability to buy a house, on our ability to buy things, and just to have money to be able to save for the future?
Yeah, no, it's definitely, you're right. A lot of people don't really understand the impact of that beyond that all of a sudden things are just more expensive. And that's fair. Again, we don't teach it. So how can we expect everyone to understand this? The impact of it essentially is that you will be in debt longer, significantly longer, when interest rates are high.
Right.
So that asset that you're paying down is not going to be fully yours for that much longer. And now we're talking possibly generations. And so the higher it goes, the more out of reach it will be because you're paying the loan, that wherever that loan may be. Once interest rates go down, as we did enjoy in the prior years, there's more risk that can be had because the cost of borrowing that capital is cheaper. So then you can actually afford it. You can afford to take a little bit more risk. You can afford to spend a little bit more because you're not paying down a loan. You're actually paying down the principal, which means that the asset becomes yours. So you can leverage that. You can utilize it. There's a lot of really cool tips and tricks you can do that are really simple and easy. You can afford it. So if you could afford a certain dwelling, whatever size 5 years ago or whenever we were benefiting from lower rates, to now, you can't afford it anymore. And the irony of it is that maybe your payment didn't change. So maybe you're paying like $3,000 a month for whatever. Well, that $3,000 a month now doesn't qualify you to buy the very thing that you could have bought a couple years ago. Right. For the same payment
that you're in.
Or you might be in it already, but you can't change it. And you might even be paying the same amount in rent, but you can't afford it on the mortgage side, for example. So that asset can't be yours because the lender said, well, you don't pass the test.
Right. So then I guess on the affordability side, we have the more taxes not helping, more fees to actually get these things built, not helping, higher interest rates, not helping. It's not a rosy picture. And more people coming needing to buy more things. And we haven't even talked about inflation. So you're just stacking odds against people.
Yep.
I was more optimistic about life before this podcast.
No, like it is what it is.
Altogether.
Yeah, it is daunting and frightening, but that's where I think in our real estate development community, we've all banded together, or a lot of us have anyways. And so for that, I'm very grateful. So there are a lot of, committees and communities out there, like I mentioned, UDI, ULI crew, And with UDI, I'm very active with them. And I really enjoy that because where in any other industry, you're not you're typically a competitor with whoever is in the same game. But here we're not. Like every developer in the Lower Mainland could build out their product tomorrow, and we still won't have enough.
Right.
So we actually need to band together and union together, not by the virtue of a typical union, but as one, and work through all this chaos. And so we have started. So that is the rosy picture on the fact that we are working together. We are collaborating directly with more homeowners that are selling. We're collaborating with municipalities. The province has gotten involved as well. And have your opinions on political stance all you want, but at least they're vocalizing, hey, this needs to change, this needs to change. Yes, it's not perfect. Yes, there's more to do. But at the same time, like, it has to be more front and center. The policies need to go away. The restrictions need to go away. The red tape needs to go away. And as an industry, we are getting a voice where typically years prior, nobody really cared to listen to us. So that is helpful. Still significantly more changes. There needs to be more differences. There needs to be more movement to actually hit the targets in which we are being told we need to hit.
Right.
Because the way status quo is, the way even with this minor progress, we're so far. It doesn't matter. Like it's so out of reach. It's not even funny. And the changes aren't addressing all the other underlying issues. But that's the thing. Like, we need to have industry, the boots on the ground, the grassroots folks, a part of the policy making. And in some areas it's happening. In some areas that actually would move the needle, it's not.
Okay.
Yeah.
And then what do you think it would take for interest rates to start to come down?
For interest rates to come down, a variety of factors. But overall, if you just simply look at the U.S. economy, we typically will mimic. And so we are affected by U.S. changes as well, because that will affect our dollar. So it just kind of depends on what the decision makers want. Do they want a very weak dollar, or do they want to increase inflation even further? Do they want more defaults? So the factors are there to showcasing that, in order to make our economy more viable, we need to make interest rates lower. But they keep dangling this carrot that maybe it's June, maybe it's July. So I don't know. I think it's all there. I think we've all showcased we need this rate to go down just to bring prosperity back.
Mm-hmm. And then, so again, traditionally our clientele is a little bit on the younger side for most of the people that do what we do. How can they, like, if you had somebody who was, say, 35, 40, 45 years old, has a business, and maybe their family's getting bigger, so they had one kid, now they have two or maybe three, and they need to graduate from the 1 or 2 bedroom apartment into something bigger. How can that happen? And like, what are some things that they could do?
Oh, well, it really comes down to affordability. And so for that person, if income is typically, it is what it is. Like, you can't just dramatically change that because now you have to qualify for more. There's daycare costs. Like, I've got 2 kids, and that is challenging. There's a lot of challenges that are going to stop that. But I would say lobby with us. Join our community, even though you're not a developer, but really understand what it is to be a developer. Like, listen to us, come to our events, come reach out to us or me personally, just to understand, like, what's going on in our community within the development realm, and what is causing this challenge, right? Like, why isn't it easy to go from a studio and then progress all the way to a single family house, which is essentially going away anyways? But whatever your housing and dwelling needs are, why are those mixes not happening where it's attainable? Community is key, and we actually need more, on our side, because we're all going for the same goal.
Right.
I know typically we're pictured as the big bad wolf in development, which, there's, bad actors in all industries, but overall, we just want to do our job, which is just getting housing done and doing it right. We really do believe in the communities we work in. We believe in providing the right project. But even with us, we have a community of folks that are our right hand, So On the finance side, the mortgage side, we use Green Grove Capital. We use Boomerang Financial. So, Boomerang's out of Kelowna. Green Grove is out of the Lower Mainland. And then they help us navigate our capital concerns, but they also do work with, homeowners. And that's because they can understand the whole spectrum. And then also they can understand what's coming up the market. Maybe you can get in a pre-sale. Maybe we can do a really cool joint venture if you're selling your land. There's a lot of opportunities, but you have to kind of be a part of the community to get in there. So, join, listen, learn. There's other really amazing, great for the community environment programs coming in and requirements on the development side. Like there's more sustainability requirements, ESG, decarbonization, and all of that matters, right? I do agree that we need to make sure we're watching and, for our community, our world, our children that are going to be taking on this globe. But, again, who's your community partner? So we partner with AES Engineering. And so they actually really focus on not even just your capital costs, but your operating costs to make sure that your project is feasible. Mm-hmm. So if we can have a feasible project, we can provide that savings over to the next, to the end user. So having all this, taxes and fees and all those things that work against you. But if we get the density we need, which we're really good at getting because we understand the policies in the cities that we work in, so we have that sensitivity so we can offset and mitigate our risk, which is kind of our Big Mac sauce. And then our community, our collaborating partners, even yourselves, like Safe Pacific, you add so much value in how we can invest our funds to make sure that we can get this done properly. So it's not just a simple answer anymore. And right now, for the average person that just wants to simply move from one dwelling size to a different, get more involved. Yeah. That would be my answer.
What would be like a practical way to get involved? Like, is there an organization to join, or is there an email list, or is there like
the UDI, ULI crew? Those are the ones that are more development geared. But you can always attend some of the socials and the events. You can, when your city is doing an NCP, so a neighborhood community plan change, an official community plan change, or your city is showcasing, like in this area, we are now looking at updating, the dwelling and the density. That's your time on the municipality side, wherever you live. Like, go to those events. The cities are hosting them. There's always a parks review board. There's always something changing in all cities. But are you attending that? And then if you are attending it, think about the next generation. Like, where do you want your children to live if you already live there? Probably close by. Well, if there's no dwelling, if you're not adding density to your neighborhood, it's not going to happen.
Right.
Like, they can only go somewhere else, because unless if you're going to give up your home for them. So I think having that broader mindset of, well, what do I want for my community? Maybe you don't want change. Well, guess what? It's happening anyways. So it's the removing the concept of NIMBYism to YIMBYism. So yes, bring it into my community.
Right.
So I actually led the Residents Association in my neighborhood too.
Okay.
And so understanding the voices and concerns of your neighbors is important, but also educating them on, okay, well, there's ways to do density correctly. And there's ways to be a little bit too aggressive on it that will actually destroy the fabric of your community. But at the same time, what does your community look like in 10, 15 years, right? Like, are you leaving it yourself, or are you going to stay there forever? But how do you welcome people in? And, people that actually need these transitions, these different dwelling types, right? So having housing choices, right?
And then if I've never been to one of these meetings, a UDI or ULI, and I go, what do I do? Like, how do I participate? What do I say?
Sometimes there's just information sessions. So there's be a keynote speaker, there'll be a panel. You just essentially can listen. With the municipalities, you're always welcome to, attend those events. It's the municipality's planning staff that's typically there. And they're just showcasing, like, hey, what do you want to see in this community? And you can ask them. You can go to your city's planning department and ask, like, okay, well, I want to see what, right? Do you want to see density? Where do you want to see it? What's the right type? Or you can say, hey, I live in this type of dwelling. I want to increase, I want to change in 5 years' time. Is there a project coming up in my neighborhood, right? So then, you have to be a bit more proactive if you really want to learn.
Okay, cool. And then with the amount of people that you interact with, what are some of the, like, maybe think of like the top 2 or 3 who's doing it right? Who's getting ahead? Who's making money? What are they doing? How is that happening?
Within real estate development?
Yeah, or just
Okay.
like you meet a lot of people.
Yeah.
Everywhere.
Yeah.
So like maybe if in the last couple of months, just think of maybe one or two people that you're like, wow, that guy or girl is like, they're doing it. They're hitting it.
Yeah, I think it's anyone that embraces change. And so, for our projects, for example, with the Azure Properties Group, we buy land right. So we're buying the property with enough sensitivity, right? So like as you go through the progression of what can I do with this land, typically what happens is a realtor will look at, okay, well, what does the maximum yield that the city says you can do on this parcel? And so if they say up to 6-story, for example, for wood frame construction, for wood frame condo, then that's the purchase price. It becomes at that value, right? So the issue is that the city may not allow that, right? So, there's cities out there that actually historically never hit their max density, and they're proud of that. But the issue is that the realtor comes in, convinces the homeowner, say, yep, this is what's allowable, therefore let's sell it at that value. So then they go ahead and do that. But the thing is, there's not enough juice because there's so many different things that are going to happen with the progression of development that will change your yield. And then so if you bought something that's worth like 50 units, and that's what they say, and you take it through the whole process and you end up with 48, now you're chasing the dollar that you have to get to make your break even. Forget earning anything, right?
Right.
Just your break even. But for us, what we do is we try to make sure that we can increase that density significantly. And we actually work with homeowners and landowners now too to activate their land. So then that way they can actually be a developer by working either as a joint venture with us or hire us as a consultant. And we can actually work through that process with you so you can prosper as well. And then avoid also, depending on how your land was purchased, that change in capital gains, or at least freeze it, right? There's different ways. So the prosperity side of things is how creative you want to be.
Okay.
And then how active do you want to be? And then are you willing to think outside the box? Do you have a parcel of land that maybe could be developed right now with all the SMOOs? I don't know how else to say that. The small multifamily.
Right.
Yeah, like the silly little acronym that we put together. It does activate a lot of, landowners. And so what are you going to do about that? So those are the people that I see are more on the prosperity track, regardless of your profession. But, if you're willing to be open-minded and you're willing to actually, think of outside of like, let's just hold this rental property and we'll sell it in 10 years. Well, guess what? You're going to be hit by that capital gains pretty hard. But what if you activate the land and develop it? And then you can work alongside us. And then you can actually help the housing situation, and by providing more homes into the neighborhoods that you actually live in.
Okay, cool. So yeah, a lot of opportunities there that probably a lot of people don't think about, or maybe then even just, I've never thought to go to one of those meetings.
Yeah.
Nobody's ever told me to do that.
Yeah.
So thank you for that.
Yeah.
And if you're watching, please go to one of those. And if you're not in Vancouver, then figure out whatever it is for your city, because I'm sure this exists in Toronto and Calgary and Edmonton.
Everywhere.
Montreal and wherever the viewers are. So with your CFP hat, you definitely understand what we do. And a big part of what we do is really around putting big amounts of money into insurance policies and then using that to finance things. Have you seen, or could you maybe talk about that and how you see that working in the investment world, in the development world, in the real estate world?
Yeah, no, definitely. I think right now, this is the best opportunity to get those that might be affected by this new proposed capital gains change to actually get a policy with yourselves, right? So navigating with yourself and your colleagues and Robert, they'll understand very quickly how it's so beneficial. And, insurance is such a unique beast in the sense that people typically avoid having those conversations. But if you view insurance as an investment and also a safe investment, hence the name, right? Yeah. You can actually learn quite a bit about how you can have control in this chaos, right? So from there, essentially, if you have an insurance policy, you can actually get a loan against that and then go ahead and invest in something that you're going to invest in anyways. So I would recommend front load your investment in the policy first, then go ahead and invest. Obviously I'm going to promote real estate development. It's a fantastic investment if you invest with the right group. So we do have an accredited investment arm. So we do take on investors that want to participate in a particular project. And so we'll kind of share our journey in that process and then the confidence, and we mitigate risk. And that's the biggest thing. And then life insurance is exactly that. It's risk mitigation as well. So you kind of do that double, uptick of risk mitigation. So
I promise I didn't pay her to say that.
No, but if you actually understand the product and you understand how it works, then that's exactly what one should be doing, right? So then the question you asked earlier about who do I know that's prosperous, especially in this, world of uncertainty, is those that actually do that type of work and effort of learning about it, right? So the work and effort is done by us, right? Like I'll take care of the dollars towards the investment of development and get the yield and get your return. You'll take care of the risk mitigation of your life insurance, your life, your assets, your holdings. Like, what is all this for at the end of the day? And working together. And that's the thing, is creating this community of, we can all prosper together, but we do need our clients to actually realize, wait a minute, this is a collaborative conversation now. It's not just a one-off that you can just take your life insurance, close your eyes, and then it'll grow magically. You know what? You could do that, but that's not prosperity.
Right. Okay, cool. Thank you for the pitch. That was great. Okay. And then you mentioned that this can help to mitigate with the capital gains. So what that, like to just break that out a little bit and go a little deeper, when you're holding that insurance inside your corporation, where now the capital gains inclusion rate is potentially going to go up and probably will go up, this insurance stays tax exempt. So it has a different set of laws around life insurance, and the taxes around life insurance are different. So the capital gains doesn't affect the insurance as long as you leave the money inside and you borrow it, which is what you were just talking about. You also mentioned with Azure that you guys are looking for investors, or that you take on investors. How does that work? So you said you had almost 20 projects. Do they invest in Azure and the whole thing, or do you pick one, or and who can do it? Who's allowed to do it? Is there a minimum?
For sure. Yeah, great question. So you would be participating in a particular project. So it's very project specific. And so it's not all of the projects. It's just we've had a couple that we have opened up for participation. So we do, like I said, believe in community. We believe in sharing. We believe in working together and, prospering together. And so that was kind of, we were challenged a couple of years ago that, okay, well, share in the profits then, right? Which is fair,
right?
Which is fair. And then so part of that, like, you know what, yeah, you're right. And then so we opened up a couple of our projects that are larger for that opportunity. So those that want to participate, and also for obviously, investment reasons, tax advantage reasons, whatever have you, we can walk you through that. There are minimums. You would have to be an accredited investor, and we can totally talk to you about what that means. But, it's, in my perspective, obviously I'm biased here. I think it's a fantastic way to benefit your portfolio. Obviously talk to external financial lawyer, legal, any of your consultants, whatever have you, that help you with your growth, your insurance agents, for example. But, it's working out really well. And so you really do get that sense of community because now it matters, right? So because, your dollar's there too. And so if you really care about your community and you want change, invest with a developer.
Put your money where your mouth is.
Exactly, right?
Okay. And so we're still very nebulous up in the clouds here. What does that mean? Say you've got a couple of the projects that are available. Maybe just describe one of it. Like, where is it? How many units? What are you building? What does it look like?
Yeah, no, for sure. So we've got a project in New Westminster, for example. And so that is going through the development application. So we've already submitted. We've talked to the city, going back and forth on the comments. So we're working through that. It's a little under 200 units. Oh. And so, so we're expecting, depends on the timing of things. So approximately, 2026, 2027 completion. And so it kind of just depends when you participate. The way we do the prosperity side of things is that we're bringing you in, if you come in early, with us at the land value. So we're not, hyping up the valuation. we're letting you participate with the increase that we're going to be bringing in. There's a variety of other projects, and even we've got clients that have actually asked us to take on their land and develop their land for them. So, but we're not the owner, so they're going to remain as ownership. So then they become a client of ours. So that's definitely one way to participate. And then you retain ownership, but you're also paying the bills. Whereas for us, if you're coming in as an accredited investor, you'll have like an LP GP model, and we can totally talk about that. And so you're limited in risk, you're limited in liability, you're limited in all those things. So that's been really great for a lot of our investors as well. And again, like if you want to learn about development and, you maybe don't want to attend all those meetings that I attend and thoroughly enjoy, we can have you participate, you can see it, you can go through the highs and lows with us. There's risk for sure. I'm not going to tell you that everything's rosy, but at the same time, the goal is to be together on it too. So we're putting our money where our mouth is. And so if you believe in development and real estate, join us.
Okay.
Yeah.
Cool. So 200 units in New West. Send us a message on a DM or through the website, Say Pacific, and we can connect you directly if that's something that you're interested after seeing this. It's super interesting. And also, I guess the benefit there is you can do this passively. Like, so if you have a job or a business and then that's how you make your money, and you don't want to go and have to learn how to be a property manager or a property developer, or you don't want to go and have to scout different whatevers, you can just invest here. They've done the work and they're going to continue to do the work. And then you can just participate on a more passive basis without having to go and do all the work, right? The work is just answer some phone calls and answer some emails when they need to.
Yeah. And then, obviously we'll give you the updates along the way. But if you're going to invest with us, I would again recommend doing it with the insurance way first.
Right.
So, bring the dollars to you first and then do it with us to have that additional risk mitigation.
Yeah. And you get to stack your investments because your money will grow inside the policy and then it can grow inside the real estate.
Yep.
Cool. Any final words? We're coming up on time here. What would you say to somebody who's watching this right now who wants to take that next step? And so their business is successful, it's on the way up, family's growing, they might be living in wherever they're living. And then how do we get to what do we do next?
I think it's just, it's the same thing and depends on if you want to move cities, really. Like, unfortunately, it's coming down to that where things are so expensive that, going east or north, now south. The south is actually an option now as well. So if you want to leave, then that is a solution for a lot of people. But at the same time, if you want to stay, then it does require that collaboration, the community, the investment, right? So that's one thing that I think a lot of folks don't understand is that, on the land side, we get less lending than if you're buying your residential property. If it's your primary residence, you can get up to 80% of your value, right? However, the bank will calculate that. But on the commercial side, so on the development side, we will max, between 50 and 60% of that land value at appraised value. So if you're buying it for higher than appraised, which is typically how it ends up happening, all that is cash out of our pockets to buy the land. But also the interest rate that we're paying significantly higher than residential rates.
Right.
So again, it's a cash crunch. And I know I'm not really selling the investment here, but that's just how it is. That's how the math works for us. But we need that capital. We, as in not just Azure, but the entire community in housing. We need external capital investing in real estate so we can actually build more. So we do need our local, resident neighbors that actually have maybe some funds that they could consider investing. However, they are comfortable. There's minimums and all those wonderful things too. But we need that money to be activated. We need our land to be activated. So if you have, a large lot and you have a rental house on it, consider converting that to more, right? Whatever more looks like, let us help you figure out what more looks like. And then we can even build it, right? So we've got teams that do smaller projects like 4plexes, 6plexes, and we have teams that will do larger, like the 200 condo units, whatever have you. So we do work alongside all of that. But it's also understanding that it is challenging, it is hard, but we have the ear of the federal, provincial, and municipal government now, and everybody wants housing. Yes, it is a challenge, and it's not easy, but it's getting there. And then the community. So who are you working with, right? And then, so like I shared before, like our mortgage brokers, Green Grove Capital, Boomerang Financial, we have a variety of great relationships with our private lenders because banks don't always fund. So, there's a laundry list of those folks that I could happily give you names for. And then also like the consultant side of things, right? Who your architect is matters, everyone matters. Like I was sharing about carbonization, which is a huge topic that people aren't talking about, electrification. And then so all of these major conversations have to be done with the right consultants that understand the end goal, right? So the end goal is obviously having a very viable project. And so one of our best friends owns AES Engineering that I was sharing, and they get it and they understand how to work in collaboration and union with us. And so that's the same thing for those that are looking at changing their dwelling. You got to kind of take a step back and start investing in real estate as well, is what I'd encourage you to do.
So we've spoken about Azure a few times. Obviously, that's not just you taking this land, getting it through the permitting system, building it and everything like that. Tell me a little bit more about the team. Who else is there?
Oh, yeah, thanks. So I actually work with my husband, so Gagan Sivia, and we had to really figure out how to work together. So it's not really easy on a good day, but actually it's been great. We've really worked off of each other's strengths. So his strengths are actually remarkable, and so he's the only developer I know that actually has a master's in architecture, master's in urban planning, a construction management degree, and an architectural engineering diploma.
Oh, wow. That's a lot.
Yeah. So he understands. He's been on job sites since he was a kid. His dad's a developer as well. And so he learned a lot at a young age and then took over the reins. And so about 10 years ago, himself and I actually branched away from our family's businesses and created Azure Properties Group. And where, he's the Big Mac sauce of the company. And so he's a visionary. He understands how to get all this development done because he's been working in cities longer than staff have been there.
Right.
So by virtue of that, he understands the bylaws and policies. And, when he's sketching on the back of a napkin, that's what he's giving to his architects and, that work with him to kind of showcase, like, this is the goal, this is a vision, this is how we're going to mitigate risk, and this is how we're going to navigate the city and the policies, and these are the bylaws and the rules we're going to use. And so when we're up against a concern or something that gets flagged, typically consultants that we work with are fantastic. They're an extension of our team, but they typically haven't put their money on the line on a development. They work with us, they believe in our projects, they're, working towards the same goal. But, for him, he is the lead where he can actually navigate a solution. So he can actually get, the engineer and the architect and the geotech, whatever have you, to figure out, okay, well, how do we all work together and collaborate and not reduce units? Reducing units is going to obviously change our profitability, but what is the solution here that is done in a buildable way? You can create expensive solutions. That's not a problem, but it's how do you create the solution that can be built by the average builder as well as is cheaper, right, to actually build. So not cheaper in quality, but cheaper in price, right? So not losing any of that creative success that we have, but how do you actually bring it all together? So it's that last 10% that I think a lot of people get challenged at, projects get stuck. And our project so far, we're blessed, progress and pass because, again, of that, we work with staff, we get known that, hey, we're really easy to work with, we come up with really great solutions, and we educate and teach everyone along the way.
And you also come from a real estate background before even this.
Yeah. So
you've been on lots since you were a child as well.
Yeah, no, for sure. Yeah, so my dad is a developer as well, and I grew up in real estate development. My brothers also do land development as well, along with a lot of my family members, my cousins and whatnot. And so, yeah, being on job sites as a kid, putting down poly for radiant heating as a child because, your back doesn't hurt as much, right? And so, yeah, just on job sites all the time. So I really appreciate the process and like the trials and tribulations, right? It's something that we've been a part of my entire life, as well as seeing the success and the prosperity, which is fantastic. But the conversation is typically about how to navigate these tricky situations.
Okay.
Yeah. Yeah. And then also extensions of our team, our building partner, as well as our BD. We've got a great team. So Ashley Chand, JD Gilliland, we've got a fantastic marketing partner, Jemima Bliss, and just a countless number of other folks that really just elevate who we are, and in collaboration and community. Yeah.
And you mentioned out of all these projects, you're in a bunch of cities. Maybe name a couple of them just so we know kind of what region.
Yeah, for sure. So from Vancouver to Chilliwack, so a variety of them in the middle, and the Okanagan. So just kind of
so everything in BC,
basically
in the lower part of BC.
Yeah, the lower part of BC definitely, and then we the West Kelowna specifically. We've got a couple of projects there.
Okay, cool. And then those will be anywhere from, like, what's your smallest one and what's your biggest one?
The smallest one are legacy projects that the cities just took so long in getting. So we have just a single family project of a small little grouping of single family homes, but it's because the city, we thought it would be done in 2 years. It definitely took longer. So that's just kind of phasing out right now. And then the rest of them are varying in sizes. So we have an application in for a 12-story in one of the cities. And then we've got 4 mid-rise condos in a cluster in Abbotsford, a variety of projects in Abbotsford, actually quite a bit. So ranging in condo size, a couple hundred easy, right?
Okay. Cool.
Yeah. Yeah. Overall, well over 1,000 doors.
That are all being built right now.
In various stages. Yeah. Various stages. I haven't done the count recently. Yeah.
Wow.
Yeah.
That's more doors than I'm building. That's for sure.
Yeah.
All right. Gagan, thank you so much for your time. I totally understand that you're very, very busy, and we appreciate you, and the audience appreciates you sharing. This is like a tremendous amount of knowledge from an accountant side, a planner side, a builder side, a developer side, plus the politics that goes along with that. And I know that some of your answers were very perfectly on the line. So I can tell that you've spoken to the city, the province, the federals, and you know what to say and how to say it, maybe a little bit more smoothly than I would say it. So no, I really appreciate it. That's it for today. We had a really good conversation about all sorts of things: financial literacy, government fees, taxes, interest rates. How does that work with life insurance? How does that work with real estate development? How does it work with housing affordability in Canada? And also, potentially if you would like to make some money off the huge demand for housing in Canada, how can you do that through Azure Properties? So I hope you guys enjoyed it. That's it for me. Make sure that before you go, you hit that like button, subscribe so you get notifications for upcoming podcasts and videos. Leave a comment if you've got any questions. And if you wanted to get in touch with anybody, if you wanted to get in touch with Gagan or with ourselves for anything that you've heard today, please do that through our website, safepacific.com. I will see you next time.